Hello and welcome. You are watching World Business Report here on News 9 Live. I'm Krishna Kumar. We begin the show with the big diplomatic victory coming in for India as 8 Indian Navy veterans jailed in Qatar over alleged spying charges and were facing death row have now been released, with 7 already back home in India. The government of India welcomed their release and appreciated the decision taken by the Emir of Qatar. The veterans employed by Dahra Global were arrested in the month of August last year and had been in jail since then. They were sentenced to death in October 2023, but their release followed Prime Minister Narendra Modi's intervention. The veterans expressed their gratitude to the government of India for their safe return. They said, and I quote, "We waited almost for 18 months to be back in India. We are grateful to the Prime Minister. It would have not been possible without his personal intervention and his equation with Qatar." And that's according to a statement released by a Navy veteran. Bear in mind, they were set to be hung in just about 15 days from now, but finally, as all's well that ends well, they have now been released. 7 of them are already back home in India. Bear in mind, all of this coming in as a huge relief for both the veterans and for all Indians in India and across the world. Listen in.
We have waited almost 18 months to be back in India. We're extremely grateful to the Honorable Prime Minister, Sri Narendra Modi ji. It certainly wouldn't have been possible without his personal intervention and that equation with the Emir of Qatar. I think we are grateful to the Government of India, from the bottom of our heart, for every effort that has been made, and this day wouldn't have been possible without it. Grateful indeed. Thank you so much.
Without the intervention of Prime Minister Modi, it wouldn't have been. आज हम आपके सामने खड़े नहीं हो रहे होते अगर intervention नहीं होता at that level, highest level, and especially Government of India, उनके अथक प्रयास से कि वो consistently लगे रहे and we are there in front of you.
Away from that big story, time now to take a look at stories in the world of business and finance that are set to make headlines in the coming days, from inflation data to central bank meetings. Take a look at this Reuters report.
From U.S. inflation numbers to Russia's central bank meeting, these are the stories to watch in business and finance in the coming days. January's stellar jobs number was just one sign that the U.S. economy is exceeding expectations. Its unexpected strength has fueled caution at the Fed, which has poured cold water on expectations of a March rate cut, lifting Treasury yields and the dollar. So attention falls on Tuesday's January inflation data. Any signs that price pressures are gaining momentum again could push rate cut bets further into the future. UK inflation figures are out on Wednesday. The Bank of England reckons inflation will return to its 2% target this year, but has warned it could rise again in the third quarter. Money markets have pushed out the timing of the first rate cut from May to June. Indonesians head to the polls on Wednesday to elect the next leader of the world's third largest democracy. 3 candidates are in the race to replace President Joko Widodo after a decade in power. His policies have helped the trillion-dollar G20 economy thrive, but the lead up to the election hasn't been drama-free, and that's rattled Indonesian markets. Russia's central bank meets on Friday. Policymakers have hiked rates by 850 basis points to 16% since July to tackle inflation fanned by labor shortages, ruble weakness, and high budget spending. The central bank faces the daunting task of zapping inflation without adding to borrowing costs for consumers and businesses.
So that's what the week ahead looks like, from inflation data in the US to the Russian central bank. But what about the week that's gone by? Because bear in mind, we are, after all, on a Monday talking to you. These are the big numbers and the big headlines that unfolded over the course of the last week. Take a look at this.
From why Sam Altman is thinking in the trillions to why Ford is hitting the brakes on EVs. This is the week in numbers. Up to $7 trillion is how much OpenAI boss Sam Altman may be trying to raise. That's according to the Wall Street Journal, which says the numbers involved are outlandishly large. It says he's trying to bring together investors, manufacturers, and power companies to massively boost the supply of AI chips. 5.8% was the jump for China's blue chip stock index, marking its best weekly gain since late 2022. It comes after regulators vowed to support equity markets that had tumbled to 5-year lows amid a wobbly economic recovery. Kingston Securities Director of Research, Dickie Wong, says there's one other big worry.
The Chinese property market is still in big trouble. Some of the big companies, including Evergrande, seriously in debt, and more may come. So this is the key thing that affecting the stock market itself.
$33 billion is now Toyota's full-year profits forecast, up almost a tenth on previous predictions. The Japanese giant is benefiting as sales of hybrid cars soar. Its weakness on EVs also looks like less of an issue as growth in demand for battery-powered cars slows. Over $47,000 is the average loss on every car made by Ford's electric vehicle unit. The company says it's going slow on new EV models as a result, but it still raised its full-year profits forecast thanks to raking in cash from trucks and SUVs. And $1.89 billion was the annual profit at Uber, its first as a listed company. The app saw rising demand for ride-hailing and food delivery.
Now, revenues at Sam Altman's OpenAI have surpassed the $2 billion mark, according to media reports, and the company, supported, of course, by Satya Nadella's Microsoft, aims to double that figure by the year 2025 with a strong interest from business and clients. OpenAI CEO Altman is now said to be in talks with investors, including the United Arab Emirates, over an initiative to boost the supply of chips for artificial intelligence products. More details in this Reuters report. Take a look.
Revenue at OpenAI has passed the $2 billion mark. That is according to a report by the Financial Times. It cites two people familiar with the startup's finances. There was no comment from the ChatGPT maker or from Microsoft, its big backer. The report says OpenAI believes it can double that number in 2025. It's reportedly seeing strong interest from business customers who want to use its applications in the workplace. The San Francisco-based outfit has been valued at over $80 billion. Boss Sam Altman is now said to be in talks with investors, including the UAE, over an initiative to boost the supply of chips for AI products. The Wall Street Journal says the project could require raising as much as $7 trillion. Altman is said to be pitching it as a partnership between OpenAI, investors, chip makers, and power providers.
Now, talking about chips, Tower Semiconductor, an Israeli chip maker, has proposed an $8 billion investment to establish a chip manufacturing plant right here in India, according to recent reports. Now, the plant aims to produce 65 nanometer and 40 nanometer chips, catering to various sectors, including automotive and wearable electronics. This move follows discussions between Tower Semiconductor's CEO Russell C. L. Wanga and India's Minister of State for Electronics and IT, Shri Rajiv Chandrasekhar, which took place back in October 2023. If accepted, this proposal could significantly advance India's ambitions as far as chip manufacturing is concerned. Under the $10 billion chip manufacturing scheme, India offers a 50% capital expenditure subsidy to successful applicants. Keeping it with chip makers, Nvidia is expanding its reach into custom chip design for cloud computing, including advanced artificial intelligence processors in a bid to tap into a growing market and, of course, maintain its own dominance. This Reuters report tells you all about it.
Nvidia is building a new business unit focused on designing custom chips, including advanced artificial intelligence processors for cloud computing firms and others. 9 sources who spoke with Reuters said the dominant global designer and supplier of AI chips wants to move into an area with tremendous growth and protect itself as companies are searching for alternatives to its products. Nvidia currently controls about 80% of the market for high-end AI chips, a position that has sent its market value up 40% so far this year to more than $1.7 trillion, after it more than tripled in 2023. The company's customers, including ChatGPT creator OpenAI, Microsoft, Google, and Meta platforms, have raced to snap up the dwindling supply of Nvidia's AI chips, while they try to develop their own chips for specific needs. Nvidia is trying to help them and gain a foothold in a $30 billion market, putting it into competition with Broadcom and Marvell Technology. Shares of Marvell were down 3% in late morning trading, while Broadcom was up fractionally. Nvidia added nearly 3%. In 2022, Nvidia said it would let third-party customers integrate some of its proprietary network technology with their own chips, and the company refused to comment beyond that to Reuters.
Away from all the chip making to L'Oreal. L'Oreal's fourth quarter sales growth has disappointed investors, marking a slower rise compared to the previous quarter and falling short of analyst expectations. The French cosmetics giant attributed the underperformance to challenges in Asian markets, particularly in its travel retail business, due to stricter regulations by the Chinese government. Take a look at this.
L'Oreal shares fell as much as 7.5% before scaling back on Friday. Investors were spooked after the company reported fourth quarter sales growth fell short of market expectations. The French cosmetics giant saw a 6.9% rise in Q4 sales, which was slower than the previous quarter. It totaled $11.4 billion, just below analyst forecasts. L'Oreal was hit by a disappointing performance in Asia. Its travel retail business endured tighter control by the Chinese government of resellers. These resellers purchase inventory at lower prices in other markets and resell at a discount in the mainland. L'Oreal did outperform main rival Estée Lauder, however. Sales at Estée Lauder fell 8% overall in the same period. L'Oreal also said Friday it had signed a licensing agreement with high-end fashion label Miu Miu for beauty products. L'Oreal expects to launch the first fragrances next year under the agreement.
From a cosmetics giant to a fragrance giant, Hermes reported a remarkable 17.5% increase in fourth quarter sales, surpassing expectations and outperforming competitors. The surge in sales prompts the luxury label to announce price hikes for the upcoming year.
Hermes was on trend more than rivals in the recent quarter. The French luxury label said Friday sales jumped 17.5% to over $3.6 billion in the fourth quarter of last year. That outpaced competitors and beat forecasts. The numbers mean the Birkin bag maker plans to raise prices again this year. Shares in the company jumped over 5% to a record high on Friday morning. The luxury label saw strong growth in all regions. It also described dynamic growth in China, where investors have been worrying about a weak post-health crisis recovery. Hermes chairman Axel Dumas said the firm now plans to lift prices by up to 9% this year globally. The firm has become one of the most consistent performers in the luxury goods industry. Experts say that's due to its classic designs and careful management of production and stocks, which has kept a sense of exclusivity.
Time now to put the focus on a global automotive giant, Nissan Motor, which witnessed a substantial 11.7% fall in its shares, marking a record sell-off since the year 2001. This downturn followed the automaker's adjustment of its sales volume forecast for the current financial year, coupled with the growing concerns surrounding its business operations in China. Here's more.
Nissan shares plunged over 11% in morning trade Friday, wiping around $1.8 billion off its market value. That put the stock on course for its biggest one-day sell-off since 2001. The drop came after a cautious outlook from the carmaker a day before. Nissan trimmed its sales forecast to 3.55 million vehicles, down from 3.7 million earlier. It said that reflected mounting competition and logistics issues in key markets. But it also cited weakening demand in China. Nissan saw sales there slump 16% last year, alarming analysts over its prospects in the world's biggest car market. The firm says it's taking steps to drive a revival. That includes focusing on cities and regions where the shift to EVs is happening more slowly. Chief Financial Officer Stephen Ma says the strategy helped drive a rebound in Chinese sales over the final few months of 2023. Nissan maintained its outlook for annual profits this year at just over $4 billion, despite expecting to make fewer cars. It thinks a more profitable mix of products will help it offset the lower production numbers.
On to Wall Street, where the S&P 500 surpassed the 5,000 mark, while the Nasdaq briefly touched the 16,000 milestone on the 9th of February, that's on Friday, fueled by megacap stocks and chip stocks, including, of course, Nvidia's record-breaking performance. More details in this Reuters report.
The S&P 500 closed above the 5,000 level for the first time on Friday, with boosts from megacaps and chip stocks, including Nvidia, as investors bet on artificial intelligence. The optimism didn't extend to the Dow, however, which dipped more than 0.1%, while the S&P added nearly 0.6, and the tech-heavy Nasdaq climbed 1.25%, closing just 0.4% below its record closing high registered back in November of 2021. Nvidia finished up more than 3.5% and hit a record high after Reuters reported it was building a new unit focused on designing custom chips, including for advanced AI processors. But Adam Coons, chief portfolio manager at Winthrop Capital Management, said his firm actually sold shares Friday of the market-leading chipmaker.
We're not selling it outright. We're just taking some of those gains that we've gotten and redeploying them. There's other places we see in the market where we could put money. Still like the stock, still like the company and where they're headed. We do believe in the AI story, but we just think right now the AI story is really a narrative-based investment theme, and there's not a lot of proof about what the monetization of it can be. So that's just why we're a little bit cautious here in selling.
In other movers, Cloudflare rallied 19.5% after the web security company forecast upbeat first-quarter revenue and profit. Shares of Expedia plunged nearly 18%, their biggest single-day drop in nearly 4 years, after the online travel firm said it expected 2024 revenue growth to moderate. PepsiCo fell more than 3.5% after its fourth-quarter revenue fell short of estimates as multiple price increases crimped demand for its juices and Lay's potato chips. And Pinterest shares sank 9.5% after it forecast first-quarter revenue largely below Wall Street estimates.
Meanwhile, Western officials voiced criticism against former U.S. President Donald Trump on Sunday. Now, this came in response to his suggestion that the United States of America might reconsider its commitment to protect NATO allies who fall short on defense spending, particularly in the face of a Russian invasion. More in this report.
Top Western officials criticized former President Donald Trump on Sunday after he suggested the U.S. might not protect NATO allies from a potential Russian invasion if those countries hadn't spent enough on defense. Trump's comments came during a weekend rally in South Carolina in which he appeared to recount a meeting with NATO leaders. The former president and likely 2024 Republican nominee claimed that the president of a, quote, big country, whom he did not name, once asked him about potential U.S. protection from Russia if that nation fell short on its defense spending. Trump said he told the NATO leader that the U.S. in that case would offer no protection, and went as far as to say he would even encourage Russia to, quote, do whatever the hell they want. NATO's 31 members have agreed on a target of defense spending that is at least 2% of each country's gross domestic product. Estimates have shown that only 11 member nations are spending that much. In a written statement on Sunday, NATO Secretary General Jens Stoltenberg responded to Trump's comments by saying, quote, any suggestion that allies will not defend each other undermines all of our security, including that of the U.S., and puts American and European soldiers at increased risk. Poland's defense minister also weighed in, posting on social media, quote, NATO's motto, one for all for one, is a concrete commitment, adding that, quote, no election campaign is an excuse for playing with the security of the alliance. EU Internal Market Commissioner Thierry Breton, in a televised interview in France, said Trump may have, quote, issues with his memory. Breton recalling that Trump actually had his conversation with European Commission President Ursula von der Leyen and not a male president of a NATO country, as Trump had relayed. Meanwhile, the White House had its own response, with spokesperson Andrew Bates calling Trump's comments, quote, appalling and unhinged.
Now, global cocoa prices have hit fresh record highs as traders continue to scramble for supplies, predicting even wider deficits this season, and with concerns growing for the next season as well. Take a look at this.
Cocoa beans are a hot commodity right now. In fact, they've never been more expensive, and that's bad news for chocolate lovers everywhere. Benchmark cocoa futures have hit all-time highs in New York, approaching $5,900 per tonne. That's close to twice the level this time last year. Prices have jumped as poor harvests leave supplies running short. In number 2 producer Ghana, production is expected to hit 500,000 tonnes at best. That would be more than 150,000 tonnes down on the previous year. There's concern over the crop in top producer Ivory Coast too. Last week, a Reuters poll forecast a global deficit of 375,000 tonnes in total. That leaves firms scrambling for supplies and shoppers feeling the pinch. Data from consumer tracking company NIQ shows US chocolate prices rose 11% at the end of January. Hershey says it expects its sales to drop again as a result. In the fourth quarter, it saw volumes fall 6.6%. Rival Mondelez, maker of the Cadbury brand, also saw sales drop. And there is no relief in sight. Industry sources say it's feared the shortage could last into next year.
Shifting focus to the world of entertainment, where actor Mark Ruffalo, nominated for the Oscars this year for his performance in the film Poor Things and widely known for his role as the Hulk in the Avengers franchise, received a 2,722nd star on the Hollywood Walk of Fame. Ruffalo was joined by his family and his 13 going on 30 co-star Jennifer Garner. At the ceremony, Ruffalo admitted that he nearly quit acting many times but was held up by those around him, especially his late brother Scott. Take a look at this.
There you go. Yeah, Mark. Oh, yeah.
There's nothing that's difficult in life that isn't in some way worth it, whether you make it or not. So hang on, because there's no reason I should have been here. And I tried to quit 5, 6 different times, and I had people, my friends here, who said don't quit. My mom said don't quit. My brother said don't quit. My wife said don't quit. And there's no reason I should be here, but I'm here.
Now it's time now to welcome Hong Kong's Lunar New Year celebrations here on the show. Fireworks illuminated the Victoria Harbour on Sunday, marking Hong Kong City's first Lunar New Year festivities since pandemic restrictions were lifted. The Year of the Dragon has been welcomed with a 23-minute-long fireworks display and various events across the city, including parades, horse racing, and live music, showcasing Hong Kong's vibrant culture. Take a look at this.
I didn't see the fireworks during New Year's or Christmas last year. This was the first time in a long time I watched the fireworks, and I think the last time I watched it I was really young, maybe less than 10 years old. So seeing it again, like for the first time in a long time, was very eye-opening for me. I thought the colors and the display and even the sounds were really enjoyable and nice.
And that's all we have time for on this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.